Ethereum prices have been rising, but many ETH holders remain skeptical and continue to sell their tokens at a loss. Data from Sentiment and Whale Chart shows that 39% of Ethereum is held by whales. This creates a more centralized network, which is vulnerable to price swings. On the other hand, retail investors remain interested in Ethereum as the number of addresses holding more than 0.01 coins is at a 7-month high. However, traders should be cautious as the number of long positions has been declining ahead of the Shanghai upgrade. This article provides insight into Ethereum's current market situation and the potential implications of recent developments. The data indicates that a significant number of ETH holders have been selling their holdings at a loss and that a majority of ETH holders would be profitable if they sold their holdings. Moreover, the article also states that 39% of all Ethereum is held by crypto whales, which makes the network a lot more centralized and leaves retail investors vulnerable to price swings. Despite this, the number of retail investors on the network has grown significantly over the past month and retail investors have continued to show faith in the Ethereum network. However, traders should be cautious as the Shanghai upgrade approaches and FUD surrounding Ethereum has increased. Bitcoin price broke above $25,000 on February 21st, accruing a 53% year-to-date gain. Investors hoped for a soft landing and a possible averted recession in the U.S. economy. However, the rally was short-lived, as regulatory pressure from the U.S. caused Bitcoin price to plunge 10% shortly afterwards. Despite this, metrics from Bitcoin derivatives and Asian markets suggest that pro-traders remain positive on Bitcoin. The overall trend could still favor the bulls. This article provides a comprehensive look at the current market conditions for Bitcoin. It provides insight into the potential factors influencing the price of BTC, such as retail sales data, the U.S. Federal Reserve strategy, and regulatory pressure from the U.S. It also covers the metrics used to assess the demand for cryptocurrency, such as the USD coin premium in Asia, and the Bitcoin futures. This article suggests that, in the current market conditions, odds favor Bitcoin bulls. By providing an in-depth look at the market conditions and metrics, this article is an informative resource for those looking to make an informed decision when investing or trading Bitcoin. The value of Stacks, STX, token surged 27.40%, according to CoinMarketCap, outperforming the broader crypto market. STX is connected to Bitcoin Ordinals NFT and adds smart contracts and decentralized applications to the original Bitcoin blockchain. Since January, the token has increased over 200%, and its market capitalization has gone over $1 billion. The surge has been boosted by increased storage of NFT collection on the Bitcoin Taproot share. Additionally, there has been an increased adoption of smart contracts on the Bitcoin blockchain. Indications from the Bollinger Bands suggest the STX token could be at risk of a reversal. However, the Awesome Oscillator is still showing bullish signs. This article provides an in-depth analysis of the performance of Stacks token, which is related to the Bitcoin Ordinals non-fungible tokens. It is seen that the value of the STX token surged 27.40%, which was in contrast to the sentiment displayed by the broader crypto market. The article also discusses how the Ordinals NFTs have been driving the STX token's performance and provides insights into the market capitalization of STX in terms of BTC. Additionally, the article provides the opinion of Chris Berniski, who formerly led crypto investment at ARK Invest, on the performance of STX. Overall, this article provides an informative and comprehensive analysis of the current market performance of STX.